In this video, I'll be discussing with you the hidden FHA trap that nobody is talking about. You see, most beginners think that FHA loan is the easiest or the best loan to buy their first home or their first investment property. But FHA loans come with a hidden trap that can cost you thousands of dollars before you even move into that property. And I'm talking about tens of thousands of dollars and a long-term equity loss. And the funniest part is that most people don't even learn about the pros and cons of FHA loan until it's too late. And today I'm breaking down the 4 major pitfalls that every buyers and future investors must know before buying a property with an FHA loan. If you are meeting me for the first time, hi, I'm Wale Lawal, a Texas real estate broker and a rental property investor. I am the guy that new investors typically come to when it comes to beginner safe and clear guidance that actually makes sense for first-time home buyer, first-time investor, or investor that are looking to scale their rental portfolio. And after helping over 400 people to buy their first home or their investment property, I can tell you that FHA helps some buyers to get into their first home or their first investment property. He has also set a lot of beginners backward for multiple years that they can never recover. So let me break it down for you clearly so you can be able to understand the pros and cons and be able to make an informed decision for your next real estate purchase. The number one pitfall of using FHA loan is the upfront MIP. MIP means mortgage insurance premium. FHA charges an upfront of 1.78% mortgage insurance premium added directly into your loan. So if you are buying a property of $350,000, you instantly tack around $6,230 into your loan before you even get your key. For many first-time home buyer, this is a complete surprise to them because nobody explained this to them. The number 2 pitfall of using FHA loan is the lifetime monthly insurance premium. This is the worst and the most expensive mistakes that anybody can make because again, they don't tell you about all these things. They just preach FHA as the holy grail, the holy loan that can save your life. Because with FHA, your monthly mortgage insurance never goes away, even after you hit 20% equity. But for conventional loan, once you hit that 20% equity, the PMI, which is private mortgage insurance, will drop automatically. Now, why FHA might appear to be cheaper on the upfront? FHA forces you to pay the MIP for the life of the loan. That had thousands in a long-term cost. Whether you are buying a home or you're buying an investment property, this is something you have to be very careful about and clearly educate yourself about it. The number 3 pitfall of using FHA loan that I've seen in my experience is that seller often reject an FHA offer in a competitive property. FHA offer gets rejected more often because FHA require a strict health and safety standard that the property must meet. If a homeowner has a peeling paint, old electrical, missing handrail, uneven surface, the seller must fix it before they can even close on that property. And most sellers don't want to go through all these extra repairs because they have other buyers that are ready to buy their property without going through that hassle. So they would rather just go with a conventional buyer that doesn't ask them to do all those stuff instead of dealing with somebody that have an FHA loan. And this means that the FHA buyer lose more deal, especially in a competitive market if you are using FHA loan. And here is the truth. FHA was built to protect lenders, not the buyers. And that is why the rules are so strict and fees are so heavy. The pitfall number 4 of using FHA loan is that FHA loan usually costs more on a long term. You see, when you stack everything I've discussed here together, the upfront MIP, the lifetime MIP, the higher fees, the slightly higher interest rate you get when you use FHA, and extra lenders cost because you are using FHA loan, FHA often end up being more expensive loan for a lot of beginners, especially if you have a low credit score as compared to a conventional loan. Now, I must admit that FHA will look cheaper upfront, but on the long term, when you do the calculation carefully, you will see that it's more expensive. And again, this video is not to bash FHA loan in any way. It's just to educate you as a consumer to weigh your pros and cons before you settle down for FHA loan. And again, I have to admit that FHA has helped a lot of home buyers and home sellers in several ways, especially the people that are house hacking, but at the same time, it might cost you a lot of money on the long run. So please weigh your pros and cons and make your decision accordingly. So this is why the smartest first-time buyers and first-time investors will compare FHA loan with conventional 3%, conventional 5%, among other loan products out there that's beginner friendly. And they will do this carefully before settling down on any loan. Because the smart buyers and smart investors understand that using the wrong loan can slow them down for several years after. And using the right loan to buy their first property can help them speed up their financial freedom journey. Now, if you want to avoid other beginners trap that most people always fall for, I want you to watch this next video where I walk you through the type of houses you should never buy even if the price is freaking cheap. Please watch this video, you will find a lot of value there, and I will see you in the video. Peace.